Hi everybody, in today's MTPredictor video I would like to look at our Wave 3 trade setup that we have in our standalone version and our NinjaTrader 7 and NinjaTrader 8 add-ons. But as usual we have to start with our risk disclaimer and remind you that all examples in these videos should be considered as hypothetical. No trades are actually taken, they're just shown for illustration and training purposes only. Remind you there's a risk of loss in trading and investing. Put another way, all professional traders know and understand, but more importantly accept, that losses can and will and do unfold. That's always an important point in any trading approach, that always will be losing trades. Right, today's video I'll be using our add-ons for NinjaTrader 8, and the example I'd like to look at unfolded yesterday on a 3-minute chart of the NQ. So the setup I was looking at here is this TS1. Can you see in brackets it says W3 or Wave 3 trade setup. So what is a Wave 3 trade setup? Well, if I am just going to put the major swings on here just so we can have a look at what the major swings are. Display major swings. There we go. Right, you can see the major swings are highlighted there in black. So what is a Wave 3 trade setup? Well, a Wave 3 trade setup is where we're looking to trade off the end of a Wave 2 to then catch the strong Wave 3. So if I right mouse click down here and do Elliott Wave Major, can you see how this was a Wave 1, this was a Wave 2, this was a Wave 3. So this is what our Wave 3 trade setup is looking to catch, basically the end of the Wave 2 to then trade the Wave 3. Why is that a good trade setup? Well, if we take the analysis or take the Elliott Wave off, and if I right mouse click over this red cell bar and then do analysis, the reason it's good is because the Wave 3 is normally the strongest and longest in a completed 5-wave sequence. So what that means is if the if the trade setup unfolds as anticipated, as this did, down into the typical Wave 3 WPT, then the profits are normally large, but not just large in dollars, large in relation to the initial risk. Here we're using less than 2% risk on a sample $20,000 account, so that would have meant turning an initial risk of about $320, ignoring slippage and commission, into just over 3,000. In other words, the profit was 9.6 or about 9.5 times the initial risk. So that's why we like this trade setup, is because when the trades come through, the profits are normally large in relation to the initial risk, or in relation to the losses. If this has been a losing trade, this profit would have been approximately 9.5 times greater than the loss. So that's why we like these kind of trade setups. So let's have a look at a bit more detail in this. In Elliott Wave terms, the minor pattern going into a Wave 2 is, if I do the Elliott Wave minor, it should unfold as an ABC. That's the most common place an ABC correction unfolds. You can see this is what we had here, A, B, C, and this is then all unfolding, if I clear that all off, in our Wave 2 or B WPT. But how do we know whether it's a Wave 2 rather than just a Wave B correction? Whoops. Well, ideally what we're looking to do is we look to see the start of the sequence, and this is where I developed my unique isolation approach to Elliott Wave, in that what we're doing is we look to start our sequence at a higher time frame support and resistance. The reason we do that is because we know that markets are basically random 50% of the time. That's why we believe that standard Elliott Wave analysis doesn't work, because half the time markets are random and you can't place any kind of Elliott Wave count or indeed do any kind of analysis when the market's in that random phase. But then throughout the other 50%, the market starts to get a bit clearer. So how do we define when it gets clearer? Well, for this we go to our higher time frame chart. So for a 3-minute chart, you go out to the 15-minute chart. You're looking for a time frame between 3 and 5 time frames higher. So say if you're trading hourly forex, you'd go out to the 4-hourly chart. You're looking at daily stocks, for example, you go out to the weekly chart. So what we're looking to do is we're looking to place areas of our DP support and resistance zones on the chart and see whether the market makes a meaningful reversal at those levels. The good thing about these is they're leading indicators. So I've just scrolled the chart back a bit and you can see there was a pivot high here. So if we right mouse click over this pivot high, do decision point, can you see how that gave us a resistance area? But most importantly, it's on the chart in advance. So literally days in advance, we knew this was an area of where resistance was possible. We're not forecasting the market's going to get there, but what we do is if the market gets there, and you can see as it came up on basically the start of the trading yesterday, it went up into that level and then made a meaningful reversal. So that's what we're saying is on the higher time frame, the market is basically making a meaningful reversal at our higher time frame support or resistance zones, in this case our DP. And as you can see, that nailed the high of the day as the market declined for the rest of the day. So let's see what this looks like on a 3-minute chart. Can you see there's our 15-minute resistance? So can you see how suddenly the pattern becomes a bit clearer because we can now start our sequence here. So in other words, we're ignoring what came before. We don't try and project or fit in our Elliott wave analysis before and after the fact, basically because that's where or Elliott wave analysis, as traditionally taught, falls down because the markets go into a period of randomness, and that's why the market does not keep going through the pattern as projected before. So in other words, we're looking to start the sequence here. So this is starting the sequence here. So therefore, the initial decline down will be wave 1. The initial decline will the initial correction to that initial decline will then be wave 2. We're then looking for that to subdivide into a minor ABC. If it does, we then assume this is a wave 2. If we assume it's a wave 2, we're then projecting a potential target into the typical wave 3 WPT. So there you can see the start of the sequence, initial move wave 1, initial correction wave 2 that subdivides into an ABC. This would be considered a wave 2. We're then looking to trade the wave 3. And that's how it's found in MTPredictor. If you're using the NinjaTrader add-ons, we have our market analyzer here. So you can see whether the markets are not open at the moment, so that's why these columns are blank. But you could follow the time frames you wish in your market analyzer as well. But the beauty of this is, can you see how the whole lot was set up by having this 15-minute DP on the chart in advance? In other words, you were anticipating that the market was going to make a reversal there. Once it did, you were then anticipating an initial decline down. Once that happened, then you were looking for the ABC correction up into our potential wave 2. Remember that unfolds in our wave 2 or BWPT, which it did there. And then that then sets up our W3 or wave 3 trade setup. We then look to use position sizing to keep our initial risk small. In other words, if these trade setups don't work out, and that's quite often the fact, we don't have winning trades all the time. Being successful or having a successful trading approach is not about having a high percentage of winning trades. It's about having trades that when they come through, the profits are high, but not high just in dollar terms, high in relation to the initial risks. And that's why this is one of our favorite trade setups, because it allows us to catch a strong move, but not just any old strong move, a strong move that gives you a large profit in relation to the initial risk. So that's what we're looking for. Start of the sequence of the higher time frame DP, initial decline wave 1, initial correction subdivides into a minor ABC for wave 2. We're then looking to trade the wave 3 for a profit that's much larger than initial risks. And as you can see yesterday, here was an absolutely perfect example that unfolded on our 3-minute chart of the NQ. Our MTP trend indicator that you can see down the bottom here also turned red to help give you confirmation that the larger degree trend was indeed turning down as well. If you can see that, can you see it was red at the time of that setup? So all in all, a very good example of the MTPredictor Wave 3 trade setup that was demonstrated here on our NinjaTrader 8 add-ons for a 3-minute chart of the NQ with 15-minute higher time frame support and resistance. And as you can see, the result was a very, very good trade of approximately 9.5 times the initial risk.